There we go.
All right, Alison. So I was saying that the first step is to base your M15 and also each one structure based on transfer of money. What do I mean? I mean that as we know, all the strong low, for example, when we are bullish, if these lows took out liquidity and the price action is efficient from the order flow point of view, all these are strong lows. So here, if this is my M15 or H1 structure, I would mark it something like this. This is my transfer of money based structure. So this is the first thing. Mark your structure on the time frame M15 and also on your H1. These are the two time frames we are going to use most of the times, the best intraday time frames. So these two, I want you to mark the structure based on transfer of money. Then, second step, take a trade only if there is order flow EPA. When I backtested the first time in those 5 months on EURUSD, I noticed that most of the loss was due to inefficient price action from the order flow point of view. So what I basically wait is if we have a situation like this, all right, here in this moment, we have two possible scenarios. In order to have again an efficient price action, price can do two things. First of all, it can comes to mitigate the order flow HIPAA, something like this, and then keep going higher. All right. This is the first scenario, and now my price action is efficient again, and I can keep going and looking for a buy. The second scenario is this. After my EPA has not mitigated, price creates two valid lows. Two valid lows. Now, what do I think is that even if price does not comes to mitigate my order flow EPA, now the price action is efficient again. Why I'm doing this reasoning? Because as we know, 95% of the time, the price action comes efficient again, mitigating the EPA order flow, but this is not 100%. So this kind of EPA can be left also for months. So this doesn't mean that we can't trade for months. If after this breakout structure, the price action creates two valid lows, which took out liquidity. Now, after this true breakout structure, I can be interested in buy again from this zone, if of course price creates something like this. All right, now here I am interested in buying again. Not yet here because at this moment I still expect price to go lower, mitigating there. But right now that two lows are strong. All right, two lows took out the liquidity. Now I can keep buying. If you want to be 100% sure, because maybe you say, all right, this low took out liquidity, but it is not a strong one because we have an order flow EPA, you can just wait for another one or something like this. Now you have three lows that took out liquidity, and two of these are strong. Now we can absolutely consider the order flow still efficient again. Is this concept clear, guys?
Yes.
All right, Tyson, because I want you to trade just in the best condition, and when the price action is efficient from the order flow point of view, this is the highest probability scenario. But not always price comes to mitigate this zone, so we have to wait for a new delivery of an efficient order flow before to keep going buying. All right. Then if M15 and H1 structure have different direction, follow H1 structure. But if the M15 structure is following the H1, you should think in both side probabilities. This sentence, it is better to immediately show an example because it happens in this day on EURUSD. What does happen in my transfer of money based structure? This was my M15 and H1 valid leg. All right. This is my H1 structure, high and low, while my M15 is something like this, high, low, high. All right, so this is my M15 structure based on transfer of money, while this is just my leg based on H1. So H1 is gray, M15 is red. All right. What happened here is that were both were bearish, and then here, right here, and here, M15 and H1 structure from bearish become bullish. But what is the fact is that this one was actually my H4 valid inducement. If we go on H4, what can I see is that here there is my smart money trap and this is my inducement. So right now, what happens is that my M15 structure and H1 structure are bullish, so it is correct also to look for a buy. Also because here price comes to mitigate what a daily order block. All right, this daily order block has been mitigated, so it was correct looking for a buy, but also H4 inducement has been taken out, so it was correct also to look for a sell. So in this case, what I want you to do is think in both side probabilities. Here, I took the long. Then I wanted also to take the short from the zone, but there were a news here and I can't trade on the grips during news. So I do not take these trades, but the logic was that even if my H1 and M15 were bullish, all right, so I was looking for a buy. Here I took a buy position with these targets. I must think in both side probabilities because H4 inducement has been taken out, so we can go bearish. And then the criteria we apply is absolutely the same. So here there was my M15 smart money trap. Then what I did was go on H1 and seeing that this was also my H1 smart money trap. So liquidity has been taken out for the sell. So here I would take the sell and the buy too. And that's the end of the story. The sell is out, taking out this low. This is the case in which I want you to think in both side probabilities. When your M15 and H1 are not in the same direction of your H4 timeframes. For example, right now, the best scenario would be price go above this high. Why above this high? Because above this high, we would have the perfect situation, or rather, M15 bullish, H1 bullish, H4 bullish, and if you want also the daily bullish. So all the time frames bullish. It's easier to trade when all the time frames are going just in one direction, that is the same direction, than time frames that go in different direction. This is not a really easy price action, but as you can see, the price seems to respecting bearish transfer of money order flow. This high, and now this high. So this is basically how I want you to think. And it is always the same way. The reasoning is always the same. Oh, sorry. Then the first step is the first order block of a valid imbalance is a smart money trap on M15 and H1. This is the solid base of the new strategy. This is where objectivity stays. You now are not allowed to choose random zones where take a buy or a sell. Now we just trade in the same direction of the trends. And when we are not sure where the trend is going, we trade in both sides probabilities. And the only criteria you must respect always is that the first order block with a valid imbalance is a smart money trap. And I want you to look this just on M15 and on H1. At first, I was looking at it also for the H4 timeframes, but then I noticed that these concepts applied from a swing point of view has a lower win rate. What do I mean? I mean that on H4 price tends to react more time from the zone that we would call smart money trap than how it does on M15 and H1 timeframes. So I removed H4 smart money trap. On H4, we just mark the inducements to see where price can give us a reversal. The first step is if the price took out an important liquidity level on the higher time frame, decrease the risk. This basically means that we are more interested in protecting our capital than making money. Making money is just a side effect of protecting capital in a proper way. So, for example, when I think in both side probabilities, like here, important liquidity taken out, I'm thinking both bullish and both bearish. Here on this trade and also on this trade, I would not risk lots. Why? Because if I'm risking a lot, and with a lot I mean 0.75, that is the highest risk we can use, I can took two loss in a small time ranges. This means lost the control of our emotions in an easier way. So to avoid these, just risk less, 0.25 on both the bullish trades and the bearish trade. Then the last one is about my M1 confirmations, and always wait for a full price behavior or price delivery as M1 confirmation. When I'm talking about full price behavior and full price delivery, what do I mean is if this is our higher time frame SUPY or an interesting liquidity level, okay, this is my M1 structure. What is a full price delivery or full price behavior? For example, a full price delivery is this. And you put your entry here with stop loss below hits. So a full price delivery is not taking your entry after inducements got taken out, taking your entry here, and then put your trade. So trade with a small stop loss, something like this. A full price delivery is after the liquidity has been taken out, I wait for the true breakout structure. And after the true breakout structure, I took my trades. This is what do I mean with full price delivery or full price behavior. Take your trades not with just a candlestick confirmation, but when there is the true boss or the true shock in the case of the price behavior. Full price behavior is something like this. And you put your trade there with stop loss here, not just waiting for a candlestick confirmation, waiting for the true boss. Doing this, what happened is basically decrease the risk-reward ratio, but increase the win rates. And increasing the win rates, but decreasing the risk-reward ratio, it means earning less money, less risk-reward, means less money, but we have a higher win rate. This means less probability to lose the controls of your emotion. So also the aim of waiting for a full price delivery or a full price behavior is always, the aim is always to protect the capital, not to make money, to protect the capital. Money comes as side effects. Why I'm starting to have this vision, this is also thanks to the new technologies like, do you know what are HFT?
High frequency trading?
Yes, exactly. These are bots that pass the challenge like, there is, for example, TFT platforms that instead of paying $500, you pay $2,000 and you already have the 200K accounts in live, not in demo. So you do not need to do the phase because a bot and an HFT would pass the phase for you. So now you can trade in this way without need to do high percentage to pass the challenge. The aim of this strategy is not doing risking a lot with large stop loss to do high percentage. Is more having a high win rate in order to protect our capital. Thanks to HFT, you do not need to do the two-phase challenges and then do a 10% and then a 5% to pass the first and the second phase. You can just pay more, have your challenge already passed, and now you can trade in this way. So making a small amount of trades per month because we just look at one max two pairs, not a lot of opportunities, and making between the 3, 4, and the 8% in a month. And do these kinds of percentage with a high win rate and a good psychology. You can, for example, buy 2, 3 challenges of 200K using HFT to pass them. So now you have 3 funded accounts in your hands, an objective strategy with a high win rate that you only need to practice. And then you can do small percentage, but constantly every month. Because despite the vast majority of the strategy that use small stop loss, high risk rewards, here you will have a good psychology. The probabilities of blowing an account because of a losing streak and revenge trading are significantly lower than the other strategies. This is the interesting aspect. Okay, good. All right. So this is what I'm planning to do. So do not do normal challenge anymore, but do HFT challenge. Purchase, thanks to HFT 400 or 600K of capital. And after that, just a 5% in a month are something like 15K with paying taxes. So this is my aim, to build a solid strategy, not too difficult to apply, with a high win rate, and the risk reward is secondary. I'm not interested in it. I'm more interested in having a high win rate so I can have a good psychology. For this, risk management is not high. I'm not risking too much, even if I'm using large stop loss, like 0.75 of risk is only when your stop loss is bigger than 10 pips and no higher time frame important liquidity has been taken out. And I also forgot to write H4 and H4, H1 and M15 in the same direction. Only in this case, I want you to risk that much. Okay. 0.5, when the stop loss, sometimes you will happen that you wait for a full price delivery or for a full price behavior and your stop loss is 6, 7, 8 pips. That's fine. Just risk less. 0.5, right? If your stop loss is smaller than 10 pips. Then you risk 0.25 in all the other cases. What do I mean? For example, right there, important liquidity has been taken out, so you are going to think in both bullish scenario and bearish scenario. So just risk less because there is the probability that you can take two loss in a really small window of time. So risk less. Do not risk a lot. Just use a small risk. The best situation is where it's not this one because as you can see, price is creating ranges, infinite algo, so it is basically accumulating in this period. Is in the situation like this move, this move. In all this bullish move, the time frames are T in H1 and H4 are all bullish. So this is the best scenario where you can pick the best trades when everything H4, H1, and N15 are in the same direction. They are all bullish. And the last thing is where to put break even. Put break even just before a news. All right, so let's protect your capital, or just if there is a change of momentum. So price, you took, for example, a long. All right, you took here your long price starts going in your direction in a calm way, but keep in the right direction. And then start doing something like this. Put break even in this case, put break even because price is probably going to hit your stop loss. So when you see that price start going down with a really stronger momentum than the ones with which price was going high, I want you to put break even to protect your capital. So as you can see, the trading plan is now easier also to understand. The trigger is more objective. So now I want to ask if you have some question about these parts.
What about the strategy that you mentioned before with the resistance and the trend lines and stuff like that? You
Oh
don't
yeah, I
use
used,
it
yeah,
anymore?
yeah, yeah. No, I still use them as additional confluence. But what I notice is that most of the times when price approaches our smart money trap on M15, you will notice that this smart money trap is near to resistance and support level, and also trend line has been taken out. What do I
Yeah.
mean? So to make my trading plan easier, after noticing that when price approach the smart money trap, almost every time trend line liquidity has already been taken out, support and resistance zone has already been taken out, like here, support and resistance zone already been taken out. I noticed all these things, so to make it easier, I just put the focus on the smart money trap. But for sure, I still use them as additional confluence. Seeing them being taken out, trend line clearly being taken out, is always a good confluence. Like all the other things I teach to you, they are still good confluence. Like for example, the manipulation of the session, to look where a high is coming from, if it is coming from a build-up zone or if it is coming from the mitigation of an EPA. All these things, you still have to use them as additional confirmation to gain confidence before taking a trade. But this, right now, this is what's I can say that this is your trigger. All right, more than a treatment plan, this is a trigger. All right, this is the trigger to go in a trade, to enter in a trade. All right, guys.
Yes.
Okay, now let's see. All right, this example. All right, this is an example of a general situation that we can face on a trading market. As you can see, we have three structure. The red one is the H4 structure. So this one would be my SMT on H4 because it is the first zone with a valid imbalance. And this is my H4 inducement. Then the gray structure, it is my H1 structure. And so as you can see, this one is my H1 smart money trap and my H1 inducement. Then we have the yellow structure, that is my M15 structure, and this is my M15 smart money trap, and this is my M15 inducement. So all these three timeframes are bearish, and the scenario we can see are more like this. Price, what can do? Price can, of course, react on the smart money trap and keep going bearish. This is still a probability, even if it is low. So it is more likely price to take out the inducements, and after taking out these M15 liquidity, price can go lower, targeting this low, or price can still go higher because it needs to take out more liquidity. So now, all right, if right now the M15 structure also change, all right, from bearish to bullish, you are allowed to take this trade, this long trade, but risking less. The logic is that price, all right, is going higher. Maybe this M15 high took out liquidity, so it is a strong one, creating a change, all right? This was a protected high, a transfer of money high, change of character. Now M15 structure is bullish, and it is reacting bearish from my H1 smart money trap. So this is your SMT of M15 in a bullish way. This is your H1 smart money trap for your bullish trend. And then here, after liquidity has been taken out, you can take this long until H1 inducement, targeting H1 inducements. You see that the logic is the same. Now M15 is bullish, so it is against H1 and H4. So I want you to risk just a small amount. And remember, the only reason because you are taking this trade is because even if H1 and H4 are bearish, no liquidity has been taken out. If price behaves something like this, I do not want you to take this trade because H1 liquidity has been taken out. So price, it is by far more likely to keep going lower, targeting this low, than reacting here and following M15 structure. So the reason because now we are following M15 structure, taking this long, is because price is reacting from a smart money trap. So this reaction, it is more likely to be a fake reaction. And we can apply the same logic. Here price gives a fake reaction. Then the real reaction comes from taking out this H1 liquidity. Then price keep going higher. Here, what can happen is that after taking out H1 inducement, price can go lower, targeting this low, or maybe it can go higher and then reacting bearish. Now we can follow the same logic. If the price is going higher, all right, maybe this one my strong, some here there were a strong high, so my H1 momentum changed from bearish to bullish. Now the logic that I want you to apply is the same. If the price is reacting from a H4 smart money trap, all right, you can take this long trade after liquidity has been taken out, targeting H4 inducement. You can't take this long trade if this liquidity has been taken out. Why? because higher time frames rules on lower time frame, so it becomes more high probability for price to go lower targeting this low. So the long is not anymore valid. Guys, how do you understand the logic?
I do, yes.
All right. All right, awesome. This is the same logic that you have to apply on every time frame. Most of the times you will use just M15 and H1. I do not look a lot about H4 timeframes, but this is just to let you understand that this logic can be applied also from a swing point of view. You can apply this logic just using H1 and H4 timeframes if you are going to have more swing operativity than a day trading operativity, but the logic is the same. This strategy is a strategy based on smart money trap. The strategy when you have to pull the trigger only if liquidity has been taken out, price is not reacting from a smart money trap, and you are trading in the same direction of the trends. And of course, order flow efficient price action. So this is a strategy with an objective view of the structure and also with an objective trigger. All right, now, of course, after taking out H4 inducement, price can go lower or just change momentum. Taking these bullish trades, it is good if we have a situation like the ones we have now, because right now, price is reacting from a daily order block. So taking long trade, even if price took out H4 liquidity and my higher time frame is bearish, can still be a good idea. For example, right now, what can I expect tomorrow? First of all, I suggest you all to do the same is check how the news went out. Check how the news went out on the My Forex book. Why? Because, for example, yesterday, why this bullish move happens? Because yesterday there was important news at 8.45 and at 9. That's about Europe, and they went out really, really good dates, really good data from Euro, and this caused this bullish momentum. Now here, I was looking for a sell that I took because I had my confirmations. Here there were my M15 smart money trap. This was my H1 smart money trap. So above this high, there were liquidity. And so I took the shorts because, as you can see, there were also a full price behavior. Fake chalk, inducement, true chalk. Here I took my trade with stop loss right there. But what I did was enter here with a really small risk. Why? Because I knew that before really good news went out for the euros. All right, this is something I'm starting to do. Look how the fundamentals are driving price. For example, here, a good confluence that price was more likely after this bullish move to keep going bearish is that the data for the USD were a positive data. So if it is a positive data for the USD is stronger than the euro, so price is going to go down. So here I can expect price keep going lower at the end, something like this, and not doing something like this, because USD data were positive for the dollars. So this is something I suggest you all to do, to start also looking at fundamentals, because it can be a good confluence more about how to manage the risk, how to manage the risk. Because imagine maybe you are in a short trade from here, and then you see really good news. But trust me, guys, they were really, really good news. Housing data went out for the euros. So what can I do if I am short here, but I see really good fundamental news against me? So you can take partials. So I will start to apply myself this kind of fundamentals conference, and I'm also planning to do, a fundamental course, fundamental mentorship to understand in a deeper way the macroeconomic aspect of the market. So now coming back to what can I expect tomorrow, this is basically my view. As I told you, this right now price is more ranging, accumulating liquidity. So I'm trying to do reasoning in both side probabilities, both bullish and bearish. So what can I expect is price keep reacting bearish from this transfer of money highs. M15 structure is right now bullish. This is the new high. So M15 is bullish. H4 is bearish. And also H1 is bearish, but price is reacting from a daily zone. So for this reason, I'm going to think in both side probabilities. Now, here, when price comes to mitigate, this is my order flow EPA. I was not interested in buy here, even if liquidity was taken out, because I do not have M15 order flow EPA. As you can see, price, even if took out liquidity, and probably the main direction can still be bullish, price does not give a strong reaction because the perception was inefficient from the order flow point of view. So what can I expect for tomorrow is price doing something like this and then keep going higher, or price respecting this bearish transfer of money and keep going lower. So more something like this. All right, I'm open to both scenarios because the structure I see from daily to M15 give me the opportunity to take both trades. As I told you, the best scenario would be price keep going higher in order to later have all the structure, daily H4, H1, and 15, all of them bullish. So it would be easier to trade. You can increase the risk and taking better trades. All right, this is everything for what can I expect for tomorrow. Now, I want to show you some example from the previous backtesting I did. So let's see some trades taken. All right, I remember a particular case. Probably this one. All right, let's see some example like, all right, this is a good one. M15 smart money trap, M15 valid order block, but out of my trading window, so I'm not going to take a sell. Then price keep going higher. This is my H1 smart money trap. So of course, I'm not going to take a short, but what could you do was basically try to take a long here. Why? Because price is reacting bearish from a smart money trap, taking out this liquidity, mitigation of the order flow, and then going higher. So you could have tried a buy here. Then this is my H4 smart money trap. Probably I do not see my M1 confirmation, but I was also out of my trading window. Let's see some better example, like, all right, this one is a good one. M15 liquidity taken out and also H1 liquidity taken out. Support and resistance level. If we want to draw a trend line from external structure, it would be something like this, or you can draw something like this. So trend line liquidity has been taken out, also giving fake reaction. You see here, this is what I was talking about. Most of the time, trend line liquidity, support and resistance, smart money trap are all in the same points, all in the same zone. For this, just to not draw too much on my chart, I start to take notes more of smart money trap than all these other kinds of confluences. So here the were liquidity taken out, and now price action becomes sufficient again, waiting for my M1 full delivery, and now targeting the low. So do you see? H4 was bearish, everything was bearish, H4 bearish, H1 bearish, M15 bearish, risking 0.75. This is a safe trade, small risk reward. Now, same reasoning there. Look, my M15 structure is bullish. It's clearly bullish right now after taking out this strong high, comes bullish. Of course, my H1 structure is still bearish, and this is my H1 smart money trap. And what happened is basically price reacting from a smart money trap. So what can I expect is, all right, price reacting from a smart money trap. My M15 structure is bullish, so probably price can keep going higher after taking out this liquidity. So what can I do? Marking this smart money trap, liquidity taken out, and this is, you see this pullback, this is a wall pullback, not just an order block. This is an order flow EPA. Price comes to mitigate the order flow EPA, and then I take the trade. Risking less, but still a valid trade, 0.25 risk. Then, while price was reaching the target, I tried to add one more trade with the same logic as M15 SMT. Liquidity has been taken out, but I took a partial over this Asian high taken out, and then price hit my break-even or stop loss. Probably stop loss, not break-even. And then keeping higher, targeting this one. Then what happens is price going from the smart money trap. Of course, this is the smart money trap, but the liquidity was above the entire pullback. This is an important thing. Let me explain it in a better way. If this one, all right, you see, this is your pullback on H1, but there is no imbalance, so you have to go until the order block with an imbalance. The liquidity is not above the order block, is above the pullback. So I'm not going to take a trade if price go above this level. No, I'm going to take a trade if price goes above the pullback level. So this high, because most of the liquidity of the stop loss is not above the smart money trap, but is above the pullback itself. So there I could look for a short, but out of session, so I was not interested in taking a short. All right, then what happens? Price starts reacting from H4 smart money trap on a bearish way. Now also my H1 structure is bullish, my M15 structure is bullish. So what can I do was basically seeing that there was M15 MSUPI unmitigated after this was my M15 smart money trap, H1 smart money trap. So liquidity has been taken out. Then even if the stop loss, as you can see, it is really big, there were a valid setup, an M1 full delivery, and then take my trades. Targeting the H4 inducement, the H4 inducement level, taking a partial on this high and targeting the H4 inducement level. All right. Also, this trade is interesting to take because it is one of the trades with a high risk reward, even if the stop loss it is big. And the logic was that after taking out H4 inducements and comes to an H4 efficient price action again, even if H1 and then 15 were bullish, I was still looking for a short because a higher time frame liquidity has been taken out. A higher time frame order flow was again efficient, so I was looking for a short with the same logic. Yesterday, no setup. Why? No liquidity has been taken out. Price reacting from smart money trap. Here reacting not from interesting zone. Here reacting from a smart money trap. So what can I expect? All these smart money trap reaction are what? Build-ups of liquidity. So then when price took out, this is my actual M15 smart money trap. So M15 liquidity has been taken out. Then also all this build-up has been taken out. I wait for my M1 confirmation and then take my short. All right. Targeting below. This is basically how you should trade. All right, look, this is a good example of trades in both side probabilities. H4 inducement has been taken out, but my H1 structure and M15 structure are bullish. So what am I going to do? Thinking in both side probabilities, look where I can take a good short and where I can take a good long. A good long is after the smart money trap has been taken out, M15 liquidity has been taken out, and efficient price action has been created again. This is my good long. Do you see? Sometimes we can also take high risk reward trade. This is a 1 to 7. So not every time you will see 1 to 2, 1 to almost 1 to 2, 1 to 3 trade like that. We can also take high risk reward trades with large stop loss. So this is the case where I can take a buy for this reasoning. M15 and H1 structure bullish. Objective liquidity has been taken out. Price action efficient again from the order flow point of view. And then wait for my M1 confirmation, full price delivery or full price blue, and take the trade. But I can also take a short. Logic is the same. This would have been, if I'm looking for a short, this is my M15 smart money trap. This is my M15 efficient order flow. So what can I do is liquidity has been taken out, price action becomes efficient again. So now I can look for a short. At the end, as you can see, the longs played out, hitting the take profit. But also the short was a good one. All right, guys, do you got the logic of this strategy?
Yes.
All right, this is everything. This is basically how I am going to trade. So my suggestion is to backtest it a lot. You need, because as you can see on this strategy, you will not have setups every day. So 4 or 5 months of data are not enough. In 4 months, I took something like 50 trades. So this is not enough data. So what I want to suggest you is to do at least 1 year, 1/2 year of backtest. Also 2 years, but 2 years probably too much. Different market conditions 2 years ago. So I suggest you all to do a lot of backtest with this strategy, and you can also while backtesting doing live testing, because this is not something like, there can be different point of view. What I mean is that it is pretty objective as strategy and as trigger. If we are trading the same pair, looking at the same time frames, it is really, really difficult to take different trades, sorry. And if we take different trades, probably one is doing a mistake. This because it is a really objective strategy. The opportunity are really small and are based on higher time frame liquidity, so it is difficult to lose them or to not see them. So probably thanks to this objectivity, it is by far easier to trade in the market. I will probably add also GBP USD as pair, I will decide after, of course, backtesting it and see how the strategy is performing on that pair. On EURUSD, it is good. Probably I backtested, as you know, I backtested from September to December. So there were, as you can see, a trending market most of the times. And on a trending market, the win rate is almost 80%. On a trending market, the win rate of this strategy is really, really high. Probably an average win rate would be 65, 70%. Why? Because the market is not always bullish, just bullish or just bearish. So it is not always a trending market. There are also weeks that price go sideways, and in these weeks, price action is more messy. H4, H1, and 15 time frames has different direction, so it is more probable to hit more stop loss. So the win rate probably is just a little bit less than 80%, probably around the 70% of win rates. And with an average risk reward that is 1 to 2.5, it is still a good win rate for these average risk rewards. So guys, do you have some questions about the strategy?
No.
All right, Xarite, is everything clear? All right, good. So I will send you all the trigger plan in English. My tips is to backtest it, and you can also change some parts of it. You do not you do not need to use the same trading plan of me. This is a solid base. This is of course a solid base, but if backtesting, you see that maybe you want to remove, all right, to trade just where a price action is efficient. You, of course, can do it. You, of course, can change the trading plan in order to feel more comfortable with the setup you are trading. Basically, now I am trading just one setup. The setup is liquidity has been taken out, or on M15 or on H1, and after liquidity has been taken out, wait for my M1 confirmation and take a trade. The criteria to establish the structure, if it is bullish or bearish, are objective, are based on transfer of money. Apply these criteria most of the time of M15, H1, and also if you want on H4 timeframes, and then follow these rules. And you will see that you will have an objective plan with an objective strategies. Most of the times, I do not take a lot of partials. Maybe just one before a news, or when I see price targeting an interesting liquidity level, where can I expect a reversal? I tend to take partials when my trades has a bigger risk reward than 1 to 2. I tend to take partials, seeing an interesting liquidity level where price can react against me. In particular, I also tend to take partials when we are in a situation where all the time frames, not all the time frames are in the same direction. Like right now on USD, we have a bullish M15, a bullish daily, but a bearish H1 and a bearish H4. So here in this situation where I can expect more price going sideways, I tend to take more partial. All right, guys, this is everything.
Just a question for
Now, yes, of course.
just for the taking partials part. I'm not sure if anyone is
Yeah,
using MT4, MetaTrader 4, because I cannot take partials on it for some reason.
but this is really strange things. This is, sorry guys, give me just a moment. All right, guys, sorry. About the MT4 stuff, you told me this is a strange things because right now with my phone not updated. So I know it is apart from rules or a broken rules, but this seems really strange to me.
Okay.
Hear me?
I think you had a bad connection, but I think yeah, I understood what you meant.
All right, yeah, I was lagging. Yeah, I was lagging. But what I say is that probably it is a problem of the broker or of the platform because it is absolutely not normal. I
Ooh.
All right, guys, just small problem connection. What I was saying is that I used with my FTMO challenge the 25K MT4 broker, and I never had problems with taking partials. So probably it can be a problem of the broker or of the prop firm you are using. So I suggest you to contact the assistants because this is not normal things, not being able to taking partials. So I
Mm.
suggest you to contact the assistants because it is not an MT4 problem. I
Oh,
can't take partials on my MT4, so probably it is a problem of the prop firm or of the broker.
okay, thank you.
Right, you're welcome, brother. All right, guys. Sarah, it is everything clear also to you? All right. Okay, guys, so if it is everything clear, I can stop this session. I suggest you all, as I already told you, to backtest a lot the strategy to gain confidence and to see if you feel better and more comfortable in changing something. And while doing this, you can still look at the live markets and seeing how price is behaving and also try to trade live. But I suggest for now, before to backtest a lot, use in every case a small risk. Use in every case a small risk. All right, remember to risk a lot just in the case in which our stop loss is big and all the time frames are going in the same direction. If our stop loss is big, but you know there is something is bullish, something bearish, and so on, just risk less. Same thing here. Also here, I need this as condition. So basically the risk management is when the stop loss is above 10 pips and the structure is clear, everything in the same direction, we can risk a lot. And same thing, but when the stop loss is below 10 pips, just risk less, 0.5. But when our structure is messy, something bullish, something bearish, just decrease the risk. Just use a small risk. All right, guys. So I'm going to end the session. Kevin, if you can, then send to me in private the registration, the recording of the session, so I can publish it on ALS studies. I would really appreciate it.
Okay, thank you very much,
All right.
Nicholas.
All right. Thank you, brother. Hi, guys. Have a
Bye
nice day.
bye.
Bye.